What's up everyone? Welcome to Investing with Adam. I'm your host Adam, and today we are talking about the Edmonton real estate market, what's happening, and a bigger picture than just the basic month-to-month stats. Now the reason I picked today's topic is I just pulled off the most recent stats for the Edmonton area just to get a better idea as to what's happening, and what that's showing us right now is technically we are in a what's called balanced market, and that means there's a decent number of houses for sale and amount of people buying versus being in a buyer's market where there's too much inventory or being in a seller's market where there's not enough. The reality of this balanced sellers and buyers market is really just a basic simple math calculation based off of what sold last month and the overall inventory of what was on the market, and that gives a balanced buyers or sellers market number of months of inventory available to purchase. What I want to show you next though is an image of what our market's been doing overall since 2007 or a little before that to show you what's really happening. What you'll see here is the actual price numbers in the city have dropped substantially, in some cases below the 2007 peak of the market, and the closest we've actually come to hitting that again has been in March 2015 when we got pretty close but still not right on the high price set in 2007. And what you'll notice is after March 2015, we've actually been trending on a flat or mostly a negative slope of average sale price. Now these stats, like any other stats, don't show every little nuance. Like there's some areas in the city like Richie that has been seeing an increase in prices since 2007, and there's other areas that have been trending further down. It's really just a snapshot of the average, but what it shows is that since 2015 we've been on a negative, or in best cases a flat type of market. Now the next piece of data I'm going to show you is a 5-year residential activity for the Edmonton area market to show you specific numbers of what's been going on. And what those are showing you is the average sale price, while it's kind of varied up and down from 2015 to 2019, is in all areas trending down from what it was in 2015 to what it is now in 2019. So you're looking at, say, the total residential number is 376-ish in 2015, and here we're at about 366 in 2019. Basically what I want to use this for is to show you that while the month-over-month stats are showing us that we're in a balanced market overall, in my personal opinion, and what the numbers are showing us is that we are very much in the advantageous side of a buyer's market. Based off of these numbers and off of what you can potentially get for a mortgage right now, which is sitting around 2.7% interest on a 5-year fixed term, adding that to the fact that you can potentially buy a house right now for less than what was paid for it in 07, 2012, or 2015, that to me personally signifies that it's very much to the advantage of the buyer right now. But what does that mean for sellers? If you're thinking about selling your home and you've purchased it, especially since 2015 or since even 2007, there is a high chance that you may lose money based off of what you paid versus what you could sell for in today's market. But what I want to illustrate to you today is that that might not necessarily be a bad thing. And before you decide to start chucking stones at me and say, why are you telling me that losing money is a good thing? I want to illustrate to you what I mean by saying that potentially selling your home right now for less than what you paid for it could actually be a good thing. And for that, I'm going to switch over to my whiteboard. Now, before we get started on the example, remember that this is just one specific example of two similar markets where if you were to sell in one and upgrade and buy in the other, that you would actually be in a better position in the end than if you were to be profiting. Now, let's dive in. So let's say, for example, that you have a half duplex in Summerside, and that house you paid in 2013, 2014, you paid $300,000 for it. And now let's say I came in today and talked to you and we discovered that if you were to sell your home in today's market, you would likely get $285,000 for this house, which means you would be at a net loss of about $15,000. And now that is never fun. Nobody ever buys a house to lose money on selling it. They usually buy a house to make money. Everybody buys real estate to make money. And overall, in the long term, That is usually always true. There are some cases though where it's not true, but you can still do quite well even selling in those markets. Now let's say you're moving from your half duplex in Summerside to a single family home in Terwilliger. And you want to be in that maybe high 3s, low 4s marketplace and see what you can get. Now here's a specific example where these people bought their house in 2016 and they paid $395, and they sold this summer in 2019 and they ended up actually selling it at $355,000, which means they had a net loss on this home of $40,000. So what that means for you is if you were selling your half duplex in Summerside and taking a potential loss on what you paid for it on paper of $15,000, but you moved into a similar market and upgraded, you end up buying a house that those same people ended up taking a $40,000 loss from when they bought it. So technically you can end up being ahead by $25,000. Drop that down here. There we go. So what this shows you is if you were to sell your house in our current market and potentially take a loss on what you paid for it, if you're buying in a similar market and potentially upgrading your home, you could actually end up being ahead by more than what you're behind on your house that you're selling on the one that you buy. And now to look at it another way is if you were to actually wait for your market to improve and say you ended up getting it to where you sold at $315,000, so you were making a net profit of $15,000 on what you paid. If you were to do that, the market that you end up buying in could end up going up as well. So the price that they paid at $395, that might end up being $425. What you end up with is if you end up selling at $315 and waiting for the market to turn around, and then you go and buy the same property that you could have bought for $355 when the market was down, you end up getting it at the market price that's ahead, similar to your market, at $425, instead of having a $70,000 price difference from the $285 to the $355, you end up with a $110,000 difference from the $315 to the $425. So where you technically aren't losing money on your house when you sell it, at this point, you buy when the market's higher, and your higher end property could end up actually costing you more money when you make money on your home than if you were just to buy it when the market was down and those house prices are down as well. It'd be the same as if you looked at it on the basic scale of if the whole market was down, say 10%. So if you were down 10% at 300, you'd be losing 30. If a $500,000 property was down 10%, they'd be losing 50. So it's all relative, and even though it hurts to see something like a $15,000 dent in what you paid for your home when you're usually expecting to see a profit, it can still be to your benefit to decide to move now, especially if you've outgrown your home. But if you don't have to sell, you don't need to sell, and you really want to wait until your property is going to turn a profit, then by all means, your house is your decision and you do whatever is best for you. I'm just here to try and give you a bit more perspective on what's happening and give you a bit more truth about what's going on in the current market and what things look like for you. Now, as I mentioned, this isn't specific to every house. This is just a snapshot of what's currently happening in two similar markets, and if you were to upgrade from one into the other. Every single property, every corner of the city is completely different from every other property. Every home is unique and every situation is unique, so you don't really know what's going on unless you look specifically at what you want to do with your home and what your market's doing to what is happening in the area you want to buy. And the best way to do that is by bringing in a professional to consult with you on exactly what's happening, what your options are, and what the numbers are looking like for your specific example. And another thing you can do is if you want to protect yourself from a falling market or a slight drop in the market, you can go back and check out my video on wedge deals and how to build instant equity in your property from day one to try and shield you a bit from a potential loss in the market. So to recap, not all stats are created equal, and it's always better to take a deep dive and see what's really happening to give you the most information possible to whatever decision you decide to make. But looking at our market overall, I feel personally that it is in very much a buyer's market for anyone out there thinking about getting into real estate. When you look at the overall sale price compared to the last decade, along with the actual current interest rates that you can potentially get on your 5-year mortgage. So in those two things, it can be very advantageous for you as a buyer that's sitting on the fence, maybe thinking about doing something soon but not quite sure. You could actually benefit quite substantially from taking that leap and buying now. And if you're thinking of selling your home, there is a fairly high likelihood that if you bought any time in the last 10 to 12 years, you may actually end up taking a loss on what you paid for the property. But if you're selling and buying in the same or fairly similar markets, and especially if you're actually trading up, going from your starter home to your 2-story or your larger single-family home, you could end up doing way better than if you were to wait for the market to turn around and for you to take a profit on your property. It's always about perspective. And on that note, if you have any other questions or you need more information, feel free to reach out to me anytime. I'm always here to help. If you really enjoyed today's video, make sure you hit that like button, hit that subscribe button, and click on that notification bell so that you're notified every time I drop a new video. And please, if you did see value and you know someone thinking about buying, selling, or investing, share this video with them or share it on your Facebook, on your Instagram, whatever you can do. Get the information pushed out there so that this can help as many people as possible. Give them a better perspective and help them feel more confident about buying, selling, or investing in real estate. That's all I got for you today. Hope you're having an awesome day, and I will catch you on the next one.